Hello everybody, this is Jeff Green from Profitable-Investing.com. Welcome to another edition of the Friday night weekly market update. Let's just jump right into the website here and we'll bring up the market review. You go down to the weekly market review tab and you'll then be sorted by date. So on this first page, there's just a quick section from the front of the post. So to get to the whole post, just click on the title or click the continue reading tab and it'll take you to the entire post. So the market timing indicator this week is showing that the weekly has retained its strength. It's still well into the green zone, and the daily has returned to a position of strength with significantly higher demand for stocks this week. We'll talk a little bit about the daily action. Remember, in last week's update, this was way over here in the yellow, in the red period. So let's talk about what the discussion in this week's weekly market update. I'm going to talk about four things. I'm going to spend a few minutes on my soapbox talking about why I think the CEO of Intel should be fired immediately. I think the Intel board is going to do some very bad things to themselves if they don't take immediate action on this. We'll talk about the weekly market timing indicator. We'll talk about the daily market timing and how the demand has exhibited a return to strength for stocks. And we'll talk about next week's trading. So on my soapbox, why do I think this Brian Krzanich person should be fired from Intel? They certainly have their problems to work through right now. They discovered some security flaws on some of them, on most of the microprocessors that had been manufactured in something like the last 10 to 15 years, and the fix was rumored to cause all the processors to run up to 30% slower. So there was much hand-wringing and angst. There was even some government calls for Intel to replace all those chips that they had built and delivered in the last 15, 20 years. So this was a big problem, but not insurmountable. But what ticked me off about this Brian guy was as soon as he heard the news from inside his company and before he announced it to the public, in other words, before you and I found about it, he took the initiative to sell all his stock. Not only did he sell all his stock, he exercised his options, and then he sold that stock also. I think he had to hold something like 250,000 shares to retain his position as CEO. So there are very strict SEC rules against insider trading. I think this guy did something extremely bad, not only to his company but to the public. Keep in mind that he took advantage of insider information before you and I found out about it. But anyway, that's all I want to say about it. I did post a link to this Dana Blankenhorn over at InvestorPlace. I think he wrote a great article summarizing why that's a dangerous thing to do, what danger it is to the entire corporation if the board doesn't take action immediately. And he did some comparisons on other people who had served time in jail for doing less than this Brian Krzanich person did. Anyway, that's enough about Intel. That stock did not make it to this week's best stocks watch list anyway this week, so I don't have to worry about it. I didn't buy them, and what a difference a day makes. So that's about Intel. Okay, get off my soapbox now. Topic number 2. Weekly market timing indicator remains strong. You can see how strong it is. The 20 period on the weekly basis is not only increasing, but it's increasing at a faster rate. That's very good news. I wanted to spend just a couple of minutes talking about market timing and really what that means. Many people, and they love to tell me this, they say market timing doesn't work. Really what they're saying is that market timing, if they think it means selling everything when the market weakens or is foreshadowing a weak spot, then you're supposed to sell everything. That's not what market timing is, especially the way that I use it. If you sell everything based on what you think is going to happen, you're going to leave yourself open to whipsaws, just like it would have happened this week. If you'd have sold everything on the Friday or the Tuesday, then you would have missed one of the best days in trading since 2010. That's not market timing. Market timing is managing risk and portfolio risk, managing position risk and portfolio risk a little closer. In other words, when I wrote in last week's market update, you should be taking steps to tighten up your stops to protect profits and prevent losses in case a pullback occurs. When I did that to my holdings, which is the same as my portfolio actually, the total risk across the entire portfolio was something like 2.5 or 2.6%, which is minimal if you're holding a lot of stocks. So just wanted to mention that market timing does not mean selling everything. It just means manage your positions proactively. And that, I think, will help many people out. The third topic, daily market timing returns to strength. What I wrote last week was I was paying attention to this 20-week moving average as it sloped down here. You can open this and look at a larger chart. You can see that it was sloping down and increasingly going in the downward direction. Since then, we took a sharp upturn, not only the 20-day moving average, but also the 3-day moving average is well above the 20. And if you compare this time period to the recent time period where it was in a sort of a weak spot, we were back here. We were spending 2 or 3 weeks sort of sorting out where the market was going, which is exactly what happened here. And now we're back into a position of strength on the daily and the weekly market, which is really a good situation to be in. So that's the daily market environment. So what did I write last week? So last week I wrote that, however, the market has to exhibit serious strength before I would be comfortable purchasing new positions this week. You can be alerted almost immediately if I take on new positions by subscribing. So I did take on new positions. I took on new positions in EME, TROW, and MKSI. Let's just sort of go over to the portfolio here, and I'll show you sort of where we are on that. Let's click on that link and I'll take you into the portfolio. So this was the portfolio wrap as of Friday. The average days in the positions in the portfolio was 108. It dropped a little bit from last week because of the new positions I took this week. The average position percent return is 14.9%. And if you annualize that effective return, 14.9% over 108 days, you get a total a calculated return of 47%, which is pretty good. So these are the purchases. I purchased this on Tuesday, I think it was, EME at $83, T-Row price for 105 on Thursday, and the strength continued. I purchased MKSI at 101.58. If I remember the chart, it was starting to break out above a resistance level. So those were the 3 stock transactions this week. You can subscribe to have stock transactions delivered to you when they occur. That's your choice, or you can come back to this website. You can see all the detailed portfolio holdings right here in this table. You can search. Let's do a search for Facebook. I think I've been in that. Yeah. So I've been in Facebook for 491 days. I'm up, let's see, almost 50% on that stock. So this table is sortable and it's searchable. So that's for your use also. And I just wanted to show you one thing. This is a daily chart of the SPX. So this is a little bit more detail about than what you'll find on my trend charts, but nevertheless, I wanted to show you this week's trading. It's absolutely awesome. This right here, let me turn the bar on here so I can show you a little bit closer. This right here is the resistance that I mentioned had been building since the middle of December. And you can see that it was struggling to get above that, and it was actually starting to get a little bit weaker, but we do have this 50-day support line coming across here. So this is Monday's trading. It didn't make it across the resistance level, but Tuesday broke out of the gate. There's a gap there. Wednesday broke out of the gate. There's a gap there to Thursday, and then Friday, just another awesome day. It gapped up again, and we're well above the upper Bollinger Band, which is this line here. Anytime that you see activity above a Bollinger Band, it typically indicates, not all the time because it didn't do it here, but it typically indicates that that sort of action can be expected in the future. So that's it for the weekly market timing update. If you have any questions, don't hesitate to contact me. You can click on this link here for contact. So I hope you have a great week trading next week. Have a great weekend, and we'll talk to you later. Thank you very much. Bye-bye.